Hi, this is Paul Rothman, President of Financial Management Corp. In the next 7 minutes, what will follow is an explanation of long-term care so you can determine if it's appropriate for you and your family. Long-term care is defined as the inability to care for oneself due to an illness, injury, or disability for an extended period of time. One's need for long-term care can range from a few months, for a short period of rehabilitation, to many years, and can occur at any age. In short, long-term care insurance is a firewall for your assets and should be used as part of your estate planning process. There are three main types of long-term care: home care, nursing home, or an assisted living facility. Home care can be delivered by personal care assistants or companions for household tasks like cleaning and cooking and running errands, home health aides for personal care like bathing and dressing, nurses to support IVs and medications, or even more complex health issues. Care can also be delivered in a nursing home, an assisted living facility, and adult daycare. Like most people, your concerns include maintaining your independence, not becoming a burden to your family, protecting your assets, peace of mind. You don't want to become destitute when on claim, protecting your retirement portfolio, protecting the quality of life without the indignities of Medicaid, and putting you in control of your care. Most people choose to insure this risk to lessen the burden on their family while at the same time protecting their hard-earned assets from the high costs associated with care. There are a number of questions to ask yourself when contemplating purchasing a long-term care plan. A lot of people think their children will take care of them. Are any of your children in a position to stop working to take care of you? And which one of your children can best quit their job and to spend their own family life to care for you? Which of your children is able financially to pay for all or part of your care? And even if you had that one special child, is that what you want, to be a burden to your family? If your spouse is involved, can you physically carry your spouse? And if you think you can now, can you do that when you're 70, 75, or 80? How would you transport your spouse to and from a bath or across the house? How would you feel if the cost of your care left your spouse impoverished? How would you feel if the cost for your care prevented you from leaving an inheritance to your children and grandchildren? Of those who need long-term care, an astonishing 40% are under age 65, and 70% of the people over age 65 will require some long-term care in the future. As you can see by this chart, the cost of long-term care is high and will devastate most people's savings in a short time. This survey illustrates the fears people have about long-term care injury or illness. 53% of people surveyed answered they feared being a burden on family members to care for them. Ending up in a nursing home, as you see, was second with 26%. Dying, believe it or not, was third with 11%, and using up one's savings is just 10%. So now the big question, who's going to pay for all this? It's a very important question. Here are the facts. Major medical health insurance does not cover long-term care expenses. Medicare will only pay up to 100 days in a skilled care facility, and skilled care is narrowly defined and will usually last for only a short period of time. For home care, according to Medicare, they will pay on average 20 days and just 3 hours a day. A Medicare supplemental plan are not intended to pay for long-term care services. To obtain Medicaid benefits for one spouse, you basically have to be impoverished by spending down all of your assets. Do you really want to depend on family? Can you depend on your family for long-term care? They will have drastically changed their lives to care for your needs. This can be a 24-hour, 7-day-a-week job. Well, what are the funding alternatives? As you saw in our last slide, there are few, and here they are for you to read. Obviously, for most people, a long-term care policy is the most effective way of addressing this need. So now the question is, when should I buy? The fact is, you won't become any younger or healthier than you are this very second. And please don't forget about inflation. Every year, long-term care costs rise. And while you wait, the amount you will pay for insurance continues to get more expensive. When do the benefits of your long-term care policy begin? Well, there are two ways the policy will pay. If you can't do 2 of the 6 daily living activities, and they include bathing, toileting, dressing, eating, transferring, and continence. Transferring means going from your bed to a chair. Or if you have some kind of cognitive impairment, with the most common one being Alzheimer's. If you can't do 2 of those 6 or cognitive impairment with doctor certification, then the policy will begin paying for your benefits. There are only 2 mistakes you can make regarding long-term care insurance. Mistake number 1 is you purchase coverage, you pay the premium every year, you live a long, happy, and healthy life. You end up dying in your sleep, and you never receive any benefits from the policy. Mistake number 2 is you stay self-insured, which is what you're doing right now, then one of both of you needs care. Not only do you pay for it out of pocket, but the rest of the burden is placed on your family. The financial risks are too high, and the potential burdens to loved ones are just too great to do nothing. There are 6 general steps to designing a policy that's right for you. Number 1 is, how long do you want the benefits to last? And that can be anywhere from 2 years to lifetime. How long do you want the deductible or elimination period for? That can be anywhere from 30 days to 365 days. Do you want benefits paid daily or monthly? Do you want inflation protection? Do you think a partnership policy is right for you? Do you need any other added benefits to your policy? And of course, which insurance carrier do you want to use? As we discussed in the previous slide, we can design the policy to last for 2 years to lifetime. And there are pros and cons involved with each one of those decisions, which we can discuss later. Additionally, most policies allow for a rider called shared care. That's a benefit that's available for married couples and allows a combined time which can be used by either spouse. You can keep the cost of your policy more affordable by adding on a waiting period or a deductible before your benefits begin. Typically, waiting periods range from 30 days to 365 days. However, you can even have a 0-day elimination period in your policy. You can choose benefit amounts ranging from $100 to $500 a day. Benefits can be paid either monthly or daily. All policies offer an option of inflation protection. Most offer a simple 5% inflation option or a compound 5% inflation option. Typically, that's appropriate for people under age 70, and we can discuss if that's the right thing for you to do. There are many other riders available to you, including the most popular one, waiving of the home health care elimination period. The second most popular one is shared care, and we can discuss the pros and cons and whether it's appropriate for you to have any or most of these riders. Choosing an insurance carrier is very important. You should rest assured we only work with the top-rated financially secure carriers that are A-rated by AM Best or higher than A-rated. They're experienced in the marketplace and they pay claims promptly. If you feel long-term care is an important part of your financial protection, contact us. We are specialists in this field and will design a policy that's appropriate to your needs.